Hey guys, Garrett here, and today is part 5 of my series of how I mortgage my house to buy stocks and then have those stocks pay off that mortgage. If you want to know why I'm doing it, watch this video right here. It gives a good explanation of what I'm doing, the strategy behind it. There's a link down in the description for that. And quick disclaimer, investing does involve risk. I do not recommend anything that I am doing for you guys. I am just providing what I am doing just for your entertainment purposes. Here are all of the stocks that I have bought so far. They are a mixture of common stock, preferred stock, as well as baby bonds. And another quick note, I audited this entire thing and I found a few mistakes that I had. A few of the cost per share weren't quite right, or I didn't have quite the right quantity. So this is a very, very accurate statement of what I have so far. Also note that the dividend yield, which is the second column from the right, that reflects my cost basis. So that's the dividend yield I am getting it for the cost that I bought those shares. So far I've invested $76,515.72, which is yielding me an annual amount of $5,831.92. Here are all of the shares that I bought over this last month. I was fairly busy trying to get more and more invested so that I can get closer to making my entire mortgage payment with these dividends. So I ended up investing about $20,000 worth of money in, and that yields me $1,448.73 worth of annual dividend. Some of what I bought was just expanding existing positions that I already had, and some were brand new. As a reminder, I also have $15,000 invested in the real estate crowdsource funding platform of Ground Floor, and that $15,000 is invested for 1 year with an 8% note, so that gives me $1,200 over that time period, or basically $100 per month. If Ground Floor is something that interests you, there's a link down in the description that provides a referral code. If you sign up with that, you will get at least a $10 bonus. Sometimes they're giving away $20. My mortgage was $200,000, but I only got $197,460. So to date, with the Ground Floor plus all of the stocks that I've gotten so far, I have $91,515.72 invested. So of investable funds, I have 46.3% of it invested. That's giving me an annual dividend so far of $7,031.92. My monthly mortgage is $856.75. And so far, with everything that I have invested, if you divide that annual dividend by 12 months, it comes out to $585.99 of my mortgage covered so far. So that is 68.4% of that mortgage covered so far. So again, 46.3% of the money invested, yielding me 68.4% of that mortgage paid for. I still have a ways to go. I'm going to keep on buying. I'm hoping for a few down days here and there, but I'm kind of resigning myself to the fact that I'm just going to need to get invested, and as long as whatever it is that I am investing in is higher than roughly 25%, which that represents the mortgage payment plus the interest, then I'm in the green. And like I said before, I am investing in common stock, preferred stock, as well as baby bonds. I've talked about baby bonds before, but I haven't talked about preferred stock. And there's a reason that I like the preferred stock. You got to remember, I am trying to match dividends to this payment, and the bonds as well as the dividend stocks, many times they have call dates that are well out into the future, meaning that they're going to pay me a nice dividend during that period of time, which then I can apply towards that mortgage payment. Well, the preferred stocks aren't quite as risky as common stocks. So not every common stock has a dividend, but the vast majority of them that do have a dividend also have a preferred stock as well. So you have to think of it in terms of risk structure. It's kind of like a pyramid. At the top, you have all secured debt. Underneath that is unsecured debt. Then you would have preferred stock, and then at the very bottom, you would have common stock. Well, that preferred stock is almost always issued at a par value, and usually that par value is $25. So if you're looking for growth stock in the preferred side of things, this isn't the way to do it. You need to do common stock for that. But like I said, I'm trying to match yield to that monthly mortgage payment. So I need it to make that mortgage payment, meaning that the preferred stock is probably the way to go. Sometimes I can find those stocks under that par value in the $24 range, $23. I don't know, some of them I actually have at like $18. And then there's different ways that they can do preferred stock. They can have perpetual preferreds, which just go on forever. They can have ones that have a call date, but at the end of that call date, it actually reverts to, it's basically a fixed to floating type of yield, so you have to be aware of that. Or it can have an actual call date of which they're going to pay you back that par value. But the nice thing about those preferred stocks is if that common stock has a dividend and that company is having a hard time, they're going to cut that common stock's dividend. They have to cut it all the way to zero before they can ever even touch the preferred stock's dividend. And normally, if they have to touch that preferred stock's dividend, then they have to pay not only that dividend back, but they get penalized for it as well, meaning that they have to pay a couple percent above that for any of the back money that is owed to you. So I like preferred stocks, especially when you pair it with the type of investment that I'm doing with this. I'm not going to see huge returns, huge growth returns at the end of this, although, like I did say, I do have some common stock with this. But since I'm trying to make that mortgage payment for that 30-year period of time, this is a great way for me to go. And those preferred stocks many times have qualified dividends, which are tax advantaged. Those baby bonds that I invest in are treated like interest, and of course, then they are taxed as regular income. Thank you guys for watching. Make sure to hit that like button down below, as well as subscribe. I'll see you guys next time.